Good morning, dear friends. This is our third lecture on this topic, income from house property. In our earlier discussions, we just discussed the various conditions which are required to be complied with for taxing the income under this head, income from house property. In our last discussion, we tried to discuss the various situations where a person or SSC shall be regarded as a deemed owner of the property, and accordingly the income which has been derived from such property shall be taxed in his hands as the owner of the property. Now we will just discuss certain issues or matters. There are unique cases where we can invoke the provisions of Section 22 of the Income Tax Act 1961. So these are I will just discuss the cases. What are those cases where we can invoke? Means under those cases which we are going to discuss, we will charge the income of the property under Section 22. The first of such unique cases, the foreign based house property. This is the first case. It means there may be a situation where an SSC is holding a property which is not in India, which is situated outside India, it means out of India. What will happen to the annual value of such property? In terms of Section 22, if such property is held by an SSC who is a resident in India, then the annual value of such property shall be taxable in his hands. It means though the property is situated outside India, but still he shall be, the annual value of such property shall be taxed in his hands as resident and ordinary resident in India. If such person happens to be a non-resident, a resident but not ordinary resident, then the income of such property shall not be taxed in his hands, provided it is not received by him in India. It means if a person is resident in India, then it will be taxable, means foreign based property shall be taxable in his hands. If he is a non-resident in India, non-resident or resident but not ordinary resident in India, then the income shall be taxable subject to the condition that such an income is received by him in India. So these are the provisions in respect of the foreign based house property, how that would be treated in India, in the hands of the resident and non-resident in India, and non-resident or resident but not ordinary resident in India. The next case, unique case for the applicability of Section 22 is property which is owned by co-owners. A property may be owned by more than two persons or more than two persons jointly. It means when two or more persons they own the property jointly, they are called, both of them are called co-owners. They will be deemed as the co-owner of the property, and their respective shares are definite and ascertainable. It means their shares are definite and ascertainable. Then the share of each will be taxed at his income under the income from house property. It means if any house property is owned by two persons or more than two persons and their share is specific, then any income which is derived from such property shall be taxable in their hands according to their respective share in the property. This is in terms of Section 26 of the Income Tax Act 1961. The third situation is the property which is held as a stock in trade. In terms of the provisions of Income Tax Act, particularly with reference to the charging of income under this head, that is income from house property, even if you are having a business of, it means if you are having a business of letting out the house property, still the income which is derived from such business shall be taxable under this head, that is income from house property. It means even if you are in the business of giving on rent the house property and this is your business, and any income which you derive out of it shall be taxable not as the income from business or profession, rather it will be taxed under the income from house property. So the specific provision in respect of this are as the property is held by necessity as a stock in trade of a business. It means you are just holding the property as a stock in trade, and the necessity is engaged in the business of letting out of the property on rent. It means this is your business to give the property on rent. And the third is the necessity may be company which is incorporated for the purpose of owning house property. It means if you are just in any of these three conditions, still you will be taxed under the head income from house property. However, there are some exceptions to it, means this is subject to certain exception. What is that exception? The exception is that if you are just letting out your property and such letting out the property is incidental or subservient to the main business, then the rental income which you get out of such letting out, then it shall not be deemed to be the income under the income from house property, rather it shall be taxed under the head income from business or profession. It means if you are just doing some business and for the purpose of that business you are letting out the property, then the income which you receive from that property shall not be taxed under the head income from house property. For example, if you are just owning a big factory and you have got some houses, some of the houses they are just let out to your employees and you are getting some rent from them, then the rent which you have received from the employees shall not be taxed as income from house property, because these houses have been given on rent for the purpose to the employees for the purpose of the business necessity. Similarly, if you have some flats in the colony and these flats are, for example, let out to the police department so that they can safeguard the property of the factory, or you have just let out some of the property to the bank, some premises you have just let out to the bank, then if you just happen to receive any income out of it, then this income shall not be deemed to be the income under house property, rather that would be taxable under the head income from business or profession. So these are the exceptions which are to this rule of holding the property as stock in trade. So I just want to repeat it once again. This is very important provision. The property which is held as a stock in trade, I just want to repeat once again, that even if it may be your business to let out the property on rent, still the income which you just derive out of this letting out business shall be deemed to the income under house property. It means that would be taxed under this head, and it will not be taxed as the income from business or profession. Next important concept, important case is the composite rent. What would be the treatment of the composite rent? It may sometimes happens that you are just letting out the property on rent to someone, and along with the letting out, you are also giving on rent some of the other incidental thing along with it. For example, if you are just letting out a hall to someone along with the other facilities which may be there in the hall itself, for example, air conditioners, or you are letting out the building and the lift is also fitted in the building, and you have got a watch and watch off, this is also just given to the tenant. So it means some sort of composite arrangement has been made between you and the tenant to whom you have let out this building. So you may be getting some rent, and this rent is not only attributable to this property, perhaps this rent may also pertain to some of the facilities which you have tendered along with the property. So in such cases, what is required is that you will have to ascertain the value of the rent which is attributable to the property and segregate those values which are not attributable to properties. It means such values, such amount of rent which is directly attributable to the property shall be taxed under the head income from house property. And the amount of rent which is in respect of the services which you have provided, and the services may be in respect of furniture, air conditioner, or this lifts, etc. Then the income which you get in respect of those facilities, that would be taxed under the head income from business or profession. But for charging the income under business or profession, you will have to deduct the cost for incurring such facilities. It means if you are just providing the electricity to your tenant and you are charging some amount from him, then you will have to deduct the cost of providing the electricity. It means the balance portion, which is a sort of profit portion to you, shall be taxable under the head income from business or profession. So it means composite rent means it will have both. It will have the income which is derived on account of property plus on account of some facilities. So you are just getting a composite rent. So when composite rent is there, so you will have to segregate the rent which is attributable to the property and the amount which pertains to the various facilities which you have been providing to the tenant. So this is the way you can treat the composite rent. So this is the one situation. The other situation may be, I think we can explain this concept with an example also. That would be, concept would be more clear to you. Mr. X owns the property. It is given on rent to Mr. Y. Y annually pays 3 lakh as a rent of the property and rupees 60,000 for different services like lift, security, air conditioning, etc. In this case, here means Mr. Y is giving 3 lakh as a rent of the property and rupees 60,000 for different services. It means as far as this 3 lakh is concerned, there shall not be in dispute. That amount shall be taxed under income from house property. And this income 60,000, first of all, from this 60,000, you will deduct the actual expenditure which has been incurred for giving those services. For example, if the actual expenditure which has been incurred for giving those services is say 40,000 rupees. This is the cost of actual expenditure which you have incurred for earning these 60,000 is say 40,000 rupees. Then this 20,000 rupees shall be charged under the head income from business or profession. So here what we have done, the property, here we have just bifurcated the income in two parts. First part is attributable to the rent of the property which is directly chargeable under this head under section 22, and the rest of the income which does not pertain to the property, rather it pertains to the various services which have been given along with the property to the tenant. So that would not be attributable to the property, rather the actual expenditure on such income shall be deducted and the balance would be charged under the income from business or profession. So this is the way we can give a treatment in respect of the composite rent. This is one situation. Then another situation is that you may be giving the property along with the other facilities, but it's very, very difficult to make a segregation between the facilities and the rent. So in such cases, so the second solution is that where the composite rent of letting out the building and letting out of the other assets are not separable. It means you are not able to segregate the income between the income belonging to the house property and the income which is attributable to the provision of various services which have been given to the tenant. In such cases where it is not possible to segregate, then in such cases the income shall be deemed to be income under the head income from business or profession. So this income shall be taken only when the composite rent of letting out of the building and letting out of various assets along with the building, they are not separable. It means it's difficult to segregate between these two, and composite amount is taken from the tenant. In such cases, the income shall not be charged under the head income from house property. Rather, it shall be charged as income from business or profession. Whatever amount we get from this amount will deduct the actual cost of expenditure which has been incurred for provision of the various facilities. So we can understand this particular item with an example. Here, if you kindly see, X owns an air-conditioned furnished lecture hall. It is let out and the annual rent being rupees 5 lakh. This 5 lakh includes the rent of the building and the rent of the air conditioner and the furniture. You will kindly appreciate when the lecture hall is there, that lecture hall cannot be let out without the provision of air conditioner, without the provision of lighting, without the provision of various electrical items which are fitted in the hall. So it means you are not getting the rent out of only letting out of the hall, because it will not be possible for you to let out the hall on rent without such facilities. So it's very difficult to make a segregation between the letting out of the hall or the letting out of the other facilities. So in such situations where it's not possible to segregate between the letting out the property and the letting out of the various facilities, in such cases the income shall be charged under the head income from business or profession. So in this case, the letting out hall without letting out air conditioner is not separate. So we'll be charging the income under the head income from business or profession. The next case is the disputed ownership. It is also possible that the title of the property is disputed in the courts of law. When the title of the property is subject to any dispute, now the question arises, who will pay the tax in respect of the income which is derived from such property? In terms of the provisions of the Income Tax Act, if the title of the property is disputed in the courts of law, then a person who is in the possession of the property or a person who is just deriving the income out of it shall be deemed to be the owner of the property for the purpose of paying the tax under this head. So they cannot evade the tax on this assumption because this property is disputed. So any person who is owning that disputed property and he is deriving the income, then he shall be held liable for payment of tax in respect of the income derived in respect of that property under this head, that is income from house property. Next is the property which is owned by the co-owners. We have already discussed this particular concept. When the property is owned by two or more persons, then such persons are known as co-owners. If their respective shares are ascertainable and definite, then the income derived from such property shall be taxed accordingly. However, one thing is very, very important. There is one exception to it. Not exception. One thing which is to note it is that that co-owners, they are not taxable as an association of persons. It means they will be taxed separately. They will not be taxed as one entity, as association of persons. So this is very, very important point in that, in respect of taxing the co-owners under this head, income from house property. Then the last point is the principle of mutuality and section 22. This is also very, very important because the income of the house property is taxed and not there is a tax on the house property. It means if a person is getting the income out of it, not getting, because the tax is based on the annual value. So this is the income on the property which is taxed, and it is not the tax on that property. Based on that principle, will have to determine the scope of income under section 22. So this is the principle of mutuality says that the income of house property that is taxed, and it is not a tax on the house property. Now the next item is the following items, which I am just showing you some of the items. They are there, which apparently seem that they would be taxed under this head, income from house property, but the income from these properties are not taxed under this head, under section 22, and they have got some specific exemptions under other sections of the income tax act. For example, income from farmhouse, that is exempt by virtue of subsection 1 of section 10. Then if you have got annual value of one palace of annex rural, that is exempted under subsection 19 of section 10. So means the annual value of one palace, only one palace of annex rural, that is not taxable, means the income of such palace shall not be taxed under this head. Then the property income of local authority, that is exempted by virtue of subsection 20 of section 10. The property income of the approved scientific association, it has been exempted under subsection 20 of section 10. Similarly, the property which is held for a charitable purpose or property income of the trade unions, because trade unions may be owning the offices, so their properties are especially exempt. Means the income which is derived from such property or the annual value of such property is exempt under various sections of the income tax act. And the property income of the political parties, if the political parties are holding the properties, then they are also exempt under section 13A of the income tax act. Similarly, the property which is used for own business or profession, as we have already discussed, if you are using your property which is otherwise taxable under the head income from house property, but that property is being used by you as a necessity for the purpose of your business or profession, then the income which is derived out of it shall not be deemed to be income under the house property, rather it shall be taxed under the head income from business or profession. Or one self-occupied property, if you are just owning a property and you are just occupying it, then this also is not taxed under subsection 2 of section 23, that we shall be discussing in the subsequent discussions. So these are some of the examples which are not to be taxed under the income from house property. Thank you very much.